All right, guys, welcome back to the Independent Investor Channel. This is going to be a review of the self-directed Roth IRA number one. This is the flagship account that I have. This is really one of the most important, if not the most important portfolio review that I do. This is an awesome one. We're approaching $100,000 in this one Roth IRA. The real takeaways here are to understand I fully disclose the holdings, ticker symbols, share amounts, and dollar amounts associated with each holding. The real takeaway is to understand that every single one of these holdings are maintained and growing in a self-directed Roth IRA account. Now, the self-directed aspect, the designation over that Roth, is the real key. That is what allows the dividends paid, the capital appreciation that is earned within that is allowed to grow unobstructed. And each of the single stocks that I own in there, I pay zero fee for. Some of the ETFs that you'll find in the portfolio also carry with it a very, very low expense ratio. And that is really the backbone of the message, the Independent Investor Channel. This is not just a run-of-the-mill portfolio review throwing out a bunch of products that are available on the market. The real key here was to seek out exposure to the stock market via the large dividend aristocrats, best of breed in each of their industries, low-cost passive ETFs within that portfolio, and put them into a self-directed Roth IRA account to allow whatever dollars are going to be paid and appreciated in that account can have the ability to grow unobstructed into the future. And that's really the key niche on the Independent Investor Channel. New to the channel, don't forget to hit the subscribe button. We're going to jump into the portfolio right now. Please enjoy. All right, so this is representative of Roth IRA, the self-directed Roth IRA number one. This is probably my flagship portfolio review that I do. So this is going to be very, very useful for you guys to see what a mature portfolio looks like. This has actually evolved over time, over many years, over multiple brokers, rollovers. I think I've executed about 4 rollovers, I guess, since I've been investing, and probably a lot more maneuvering in this portfolio in getting to what we have displayed before you guys now in this portfolio review. But it's been a long and winding road. I would have rather have been a lot more straight in my application, and that's a lot of what I try to teach upon when I talk to you guys about getting on a plan and sticking with that plan over time, no matter what, sticking through it through thick and thin. It's super important for you to really understand and justify why you're doing what you're doing when you first start. Dollar cost average that account up, set it for dividend reinvestment, and you can monitor the account, but really should look to grow your account for many, many years without the prospect of selling. And I typically do probably more selling than I need to in this account, and my goal is to move more passive. As we get to the bottom of this account, you guys are going to see my strategic goal of shifting to more of a passive approach. Now, the long positions have really been fine-tuned over the years, and here recently, to be honest, I've been able to leverage a lot of the trading profit, pick up a lot of positions that I didn't have to buy with raw contributed dollars. I've been able to purchase some of these blocks of shares on house money, which is indicative of my trading success. That's fine. It's not one of those strategies that I advocate that new investors try to engage in. It can be frustrating. It can be humbling. You guys can see some of these positions here that haven't worked out, obviously. FedEx was one of them. But that you do have your wins. I mean, Apple's just been wonderful. Little disappointed that I took some profit in Apple at around 250. Should have just held true on the name. But you win some, you lose some. I held the 11 shares just in case the stock continued to melt up, and that's exactly what's happened. We've melted up another 20% on the name. Boeing is coming back nicely. I'm very satisfied. Almost back in to even on Boeing. Just bought it at the wrong time, right before the accident, to be honest with you. doubled up the shares in the low 330s, I believe. So that's actually helped accelerate this march back to zero. We'll get there. I'm not worried about that one bit. Boeing is a company that I've always wanted to own. It is certainly a cornerstone in the industrials sector in this portfolio, and I'm satisfied to own it. I don't really care where the stock is now. I'll continue to monitor it and be a proud owner of Boeing. Bank of America, we took a 50% haircut in Bank of America. That's fine. I took some profit there. It was up quite nicely. And Citigroup, we've held true on that at 46 shares and change, 156 in profit. Just it's come up with all the financial sector. It's been quite nice. Caterpillar in the industrials sector. This has just been the original position that I've placed here, and it actually dipped significantly when I started. I think we were down pretty big in this, and now we're back up 5% in it again. It just makes it easy when you're investing in these quality companies like Caterpillar. I hope if you're an experienced investor or you're a beginning investor, I think you can come to the same consensus that I really do strive to put the highest quality in this portfolio, as it is, and I consider it to be my flagship portfolio. CVS was bought on a strategic buy. Really bought that at the right time. That's just been a real winner for me. It's just been fabulous. I can't scoff at that. Over a month of owning the stock, up over 12%. Just demonstrate the power of single stock investing. Disney picked up 10 million initial subscribers on their rollout. So took a huge appreciation in Disney, and this is a rarity for me. I've been an investor in Disney for a long time, and rarely do I ever look at the stock. It's really been in a range bound for the last few years anyway, but I'm really starting to hold true to a rule that if you're going to invest in single stock, you really need to anticipate owning those companies for the long term. And when I'm talking long term, don't even expect to see anything or any movement in the stock inside of 3 years. I think 3 to 5 years may be one of those sweet spots that you can kind of look at it and see whether or not that initial decision was worth it. And then you can kind of do a status check then. But I think entering into individual good companies really requires the investor to take on a much longer time horizon than you may think. So don't expect that these are just going to make you wealthy overnight. Investing is investing, and it does take time for these positions to really build out. So FedEx is one of those. I've already pointed that out. Not too heavy a position. This is a strategy that I deploy when I pick up companies nowadays, is that I just enter into a fairly small starting position, and I did that with FedEx, and it's a good defensive buffer because it did take a leg down, and I'm fine to take this fine company into a downturn. Same thing with IBM. This is actually a double up in the position. I started with 10, now it's up to 20. But down just over 10%, almost 11%. That's fine. We'll sit on the dividend here. Johnson & Johnson, one of the cornerstones in the portfolio, it's been all over the place. Again, it's one of those really super long-term holdings. So, I mean, for entertainment purposes alone, guys, you can look at the dividend reinvestment program, what it's done for me, just slowly accumulating shares, slowly getting that capital appreciation, and give us a little bit of validation on the back end. A little bit of green obviously is subject to market volatility. If the market does end up getting cranky on us, that's totally fine. Coca-Cola here, that's another one of those companies that I looked at for a long time and just never invested in. But I'm super stoked to own Coke in the portfolio finally. It's one of those companies that I just felt like I always wanted to own. And I've got Pepsi in the other portfolio, so a nice complement as I do try to build these portfolios, and I succeed pretty well at avoiding overlap in both of these self-directed Roths that you guys know I'm building. Lockheed Martin certainly took this into a down. This was down a couple $100. Now has come back nicely. Only 5 shares of Lockheed Martin. and that's fine. McDonald's, I did take a double up. And this is a perfect example of what I consider to be a super long-term holding for me as I establish a base in the company. So pretty big position, to be honest with you. And picked it up on an opportunistic buy there in the low 90s. And I think we got a fairly good entry point on that. Not entirely too concerned about getting the perfect entry point, but very satisfied to own the stock nonetheless. So Medtronic here, doubled up on this position this week. So 20 shares strong in Medtronic. Northrop Grumman, 5 shares here. Kind of a starting position again in Northrop. I've traded the stock quite a few times this year, and this might be my final entry into the stock before a potential downturn and an opportunity to weather a storm with Northrop Grumman. Procter Gamble, this is actually a new position that I've taken in Procter, one of those stocks that I broke my own rule in and sold the stock for a significant profit earlier and missed out on some future profit, which, it happens. That's fine. I'm not going to beat myself up over it, but just being truthful there. So I had to pay a pretty good premium to get back into Procter here, but I really wanted some staples exposure in this, probably add Kimberly-Clark to the other portfolio, and maybe potentially a Colgate-Palmolive in the outside portfolio that I'm looking to build out. I'll explain that more on follow-on videos when I do the fixed income portfolio and my strategic plan for that aspect of the total comprehensive portfolio. So as we work down here, we work down the list. I'm going to try to get this to where you guys can see what's going on. Royal Dutch Shell, obviously the two major oil holdings have been, again, they continue to be underperformers. That's totally fine as well. Not worried at all about that. We'll skip over 𝗖𝐋𝐈𝖖𝐊. Again, if that stock ever takes off, we will be going to Las Vegas, but I don't see that happening. I see that going to zero before it goes up to $1 a share, which would be super nice. That would be a cool stock sell at $500,000, but that's wishful thinking there, just kind of a joke in the portfolio. Everybody always asks me on the portfolio review, what the hell were you thinking here? It was kind of a joke position to just take a stab at it. But anyway, Royal Bank of Canada, super low PE, and I'm pretty certain that that's a starting position in that company. And we were in the negative in that as well. I'm just now noticing that we've crept above positive in there, so we can start the dividend depreciation. 0.2 of a share already accumulated in that, so pretty cool. United Technology, the performer of the year in this portfolio, have held this for years. UTX has been a long position of mine. I'll continue to add to it if I think that it comes back off of this high in the stock, then I'll go ahead and look to add more to it, but right now I'm just exercising the right to hold. Now, the bottom two holdings I'll skip to. I've got ExxonMobil here at the bottom. That's the last equity holding. The rest are Vanguard ETFs. Nothing significant changed here. VBR small cap, that was down huge. So we're good there. And then the VEA, that was probably one of the best pickups that I've made this year as I look to establish a 100-share base in this ETF to get me some European exposure. Real estate, I've traded in and out of this many times this year, and we're down a little bit there. I'm fine with that. Starting position in the S&P 500 here, and up just 5%. Utilities ETF, emerging markets, a pretty nice position there at 76 shares, down just a touch. And then finally the VYMI, which is the international high dividend, complemented in the other portfolio with the VYM. So got the international exposure here, high dividend pair, as well as the complement of the VEA. So some pretty good European exposure in this portfolio to kind of round out. And that's it, guys. That's the flagship portfolio in a nutshell. This is the nuts and bolts. This is many years of investing, a lot of trading activity within this account as I've looked to kind of manufacture some profit within here, take price trading profit where I can and try to lever that up and buy some stock with some house money and not necessarily contributed dollars. So really hope you guys enjoyed this review of the self-directed Roth IRA #1. And with that, I will kick you back to YouTube. All right, guys, welcome back out of the portfolio review. Certainly hope you enjoyed that review. We're approaching $100,000 in the account. Just seemed like yesterday we started the account with $1,500. I remember the day that I was excited to get that Roth IRA started, and it's been quite a journey for me. And it really hasn't taken that long. It's been somewhat of a winding road, a lot of mistakes rendered in the accounts, but definitely have had some successes, aggressively funding up the account over time. Got a little bit of help from a nice bull market that's been in place for the last 10, 11 years. So very satisfied with the progress. Hope you guys found value in the transparency that I'm providing. Really need to look at this channel as a testimonial to what is possible, okay? I know what's possible for me, but I come on and I share this message with you guys so you guys can ask yourself the question, is this something that I can do for myself? And the answer is absolutely yes, and we're here to help. Again, remember to subscribe to the channel. Leave your comments at the bottom of this video if you have holdings that you think I should probably have in my portfolio, as now you've been able to review the quality of the holdings within the portfolio. Finally, share the message with anybody out there that you think may enjoy the message and the transparency that we're putting through with regard to the power of self-directed investing and what is actually possible if you just look to explore those options and become aware of the many options out there that exist that a lot of people don't know are available. Guys, thank you so much for tuning into the video, and good luck in your investment future.